Good morning, everybody. Welcome to the Trading Market Technicals Morning Call video for Tuesday, August the 6th. All I could say is very, very quiet. Yesterday was probably one of the worst days trading in this summer. Very, very quiet. We did get a little bit of a pullback in the Dow, but mainly everything just pretty much just kind of held its low and then grinded higher and sideways. Pretty much consolidated all day yesterday. Very, very quiet. Not going to sugarcoat it. There's really not much to talk about. There's a few things that I want to show you, what I'm looking for and anticipating via what the charts are telling me. But real quick, Dow Jones was down about 46 points. NASDAQ up 3, S&P down 2.5, and the Russell up 3. So very, very quiet day yesterday in the marketplace. And rightfully so when you have the VIX here sitting at a close of $11.84. It's pretty crazy. And we have another outside day, guys. So watch this VIX come back inside. I think you're going to get a little bit of a snapback in the VIX, which would put a little bit of pressure on equities. And gosh, I got to tell you, I am hoping for that because we need some volatility here. This is just really boring. Looking for trade setups during the day. And again, cash is a position, so when in doubt, and there's nothing really to do, there's no reason to start forcing trades, especially in the middle of the summer, the heat of the summer here. I would take a step back and just let the trades set up and let them happen, let them come to you. So, as I said yesterday, I do think that we are due for some sort of a pullback, and I think we've been due for some sort of pullback for many, many weeks and months. But nonetheless, the recipe is ripe for a pullback, and I mentioned that yesterday with the VIX right now at all-time low. Well, not all-time lows, but sitting at 2007 lows pre-financial crisis, and then you have extreme complacency in the marketplace. Investors and traders just literally just buying anything that they can get their hands on. Stocks that are small caps are up 40 to 60% in one day, which is totally crazy. It's ludicrous that people will be buying stocks up at that level. But nonetheless, that's when you have the the greed, the fear and greed come into play, and we have greed, boy. I got to tell you, markets are just out of control. Perfect example: we were down about 4 handles in the pre-market. We are up now 75 cents. There's absolutely no sellers to be around, and that's not a good sign because when something does trigger a sell signal, a lot of these buyers that are going to be caught up in these areas. It's going to make it for some nasty sell-off, and that's not what you want. You want an orderly sell-off, stocks that roll down, low volume, go into some support area, and then you can buy that pullback. And that's what I'm really looking for, is to look for some volatility so some stocks can actually start moving again. Now, right now, we just, markets either gap down, gap up, and then they consolidate sideways pretty much most of the day. So watch the VIX here. This is definitely a flag for me down at here, these levels. And if you're more of a swing trader or a position trader, buying volatility right now is actually a good thing. I would be looking to buy some volatility at these low levels, and even if the market gets into 11.50, average into into a nice little position trade here, because the VIX is at these extreme lows, and when we get to these areas, we usually get some sort of a bounce. So right now, there's nothing in a form of catalyst to move this market lower. If the market takes a breather, it's only because buyers have stopped temporarily. Nobody's taking profits here. So this is something that is very concerning to me. Just again, as a trader, and I'm not position trading anything. I'm just day trading for the day. But you need to know this. There's a lot of people that follow us with our swing traders and long-term investors, and I just want to make that point. Just use a little caution here. Again, there's nothing in the cards right now that says that, hey, look, we're selling off in a couple of days, but it's going to be really interesting in the next week or two. That's for sure. All right, take a look at the U.S. dollar, and it's doing exactly what I wanted to do, stabilizing right up in this 81.55 area. And if it can hold and stay in this area, and we have this little confluence area of resistance up here at 82.50, if we can break above the 20 and 50-day moving average, then I think you're going to get at least a shot to the highs and then maybe higher. And again, right now, the relationship to the dollar in equities is inverse. It's inversely correlated. That will change eventually when everybody's flooding the markets. When I mean everybody, foreigners, Europeans, people in the Pacific Rim, when they need to buy our stocks, they have to convert their dollars to our dollars, and then eventually that will coincide as one. But right now it's not; it's inversely correlated, and we're just going to keep that theme the way it is at the moment. Okay, take a look at the gold. Now, gold is down about 1290 to about 1290.95, and if you were quick, you had to really, we touched that 1348, 1350 area, and then just absolutely rolled over. So I am not looking to put on a short position here at these levels. I'd like to get them back up to about 1350, 1400. That 38% retracement comes in about 1416. That would be ideal for me. But again, guys, you're down here at this areas. We are in a downtrend. We have bearish symmetry, as you can see here: bear flag, bear flag, bear flag, and we're breaking down. Our ratio to S&P is lower. Okay, so this is a great short candidate, but I'd like to be short at higher levels, not at these levels. So I'm going to pass on this, but I am watching gold to see if it does have one more push higher and then fail, and then that's when I'll look to get short or be a better buyer down here at the 1,000 to 1,150 area. And take a look at crude. Same thing with crude, guys. We're touching this 108, actually 109, 110 area. This is off a weekly chart, this red line. So a break above this and back test and make a higher low is going to be a buy. Or I'd like to see it come down to par, which would be right around the 50-day moving average, and then look to buy that here. Right now, you're kind of in no man's land. If you see the bullish percent, ENER, is right up in this areas here. So this is actually a good spot to look for a short, believe it or not. Anywhere in the 90-ish area in the bullish percent is where I would be looking for a reversal in crude. Now, we did take this, we had this, we call the top, we call at least a little bit of reversal here. We bought this, and then we called it here, say look for a pullback, and we did get it, and now we're double topping from here. So the way the BPNER is up about the 90-ish area, we could get another low, at least retest this area here. So I wouldn't be looking to buy USO at the time or crude oil right now. I do like it lower, or I'd like it to break back above and a back test higher. Okay, and don't forget, we still got a lot of conflict going on out in the Middle East with Syria and Egypt, so that's going to put a little bit of a war premium into crude oil. Okay, so let's go right into the sectors here. I did a Fibonacci retracement from the high to the low here, from the June 24th low. Gets you down to a 38% retracement. If the market were to fail, that's what my first target would be, somewhere around the 38% at 165.50, and that's in the spiders. So that's if it does fail. Right now, we're just assuming that this is the top. Okay, we could break higher today, and then we need to readjust these Fibonacci retracement lines. But as of right now, I'm looking for 165 coincides nicely with a 38% retracement. That would be the first take profit area if you're looking to short the market. And right now, remember, I just want to make a point clear. This is not telling you to short at all. I'm just saying be ready in case this market does roll over, because anything can happen here. We can move higher and or we can move lower. So the charts are just kind of, yes, they're extended. Yes, we do have some red flags, but that doesn't mean to go out and short the market. Okay, take a look at the diamonds. As you can see here, inside day, we did get a pushback from the previous day, but now we still have an inside day. Really did nothing yesterday, guys. As you can see here, take a look at the IYT inside day from the previous. I'm sorry. We did take out yesterday's low, the previous day's low, but we're still within this large engulfing candle. So the transports are showing a little sign of weakness again, but again, nothing really to write home about. This is actually healthy for the transportation sector to roll back. And we have the XLF really not doing anything at all. So you could see a lot of these key sectors, there's no movement. Yesterday was just a terrible day to do any type of trading. Here's Apple, very quiet. We did get a little movement in Apple, again breaking out of its high here from this little cluster area. Now we're approaching a good area of resistance, which is the 200-day moving average of 476. Now, if we break through that and then we can consolidate, I would like to see Apple come back down into its 8-day moving average, or even down here in the 20-day moving average, right around the 440, 448 area. Keep above that gap support, and then look to really rally again going into the late summer, early fall area, and then maybe run up higher and get some of these product launches, and then really start to get momentum to the upside. But right now, again, I think it's just chopping around here, and it had a good run for a good 5 6 days, but still, guys, I would Apple. Let's put it this way: Apple needs to prove itself that it's going to continue to go higher. And lastly is the Qs. Qs did take out its previous day highs, making new highs again. I mean, you could see this is a little bit crazy. It's just absolutely, I'm dumbfounded just the way the market is moving. Look at this, just from the 24th, gap up, rolled over for a couple of days, gapped up, moved higher, and I mean, this is a bit stretched to me. I mean, I would not be buying technology stocks or any, or at least the Qs rather, this overly extended. I think it needs to come back, chop around a little bit, and then that's just me. That's just in my trading plan. But it's just the risk is way too high buying stocks or buying at least the Qs up in these areas. All right, guys. Hopefully we get some movement this morning. I'm really looking forward to get some volatility back in the markets. I really can't wait till the summer's over so we can get everybody back on board and get some stocks moving again. But I wouldn't be surprised if we get some sort of a pullback here. We may move higher, but I think that in the short term, in the next couple of weeks, I think we get a little bit of get some downside movement here before we move higher going into the fall. All right, guys, have a great day. We'll speak to you tomorrow. Take care.